So in this lesson, we're going to cover the best way to do your multi-time frame analysis. And this would be the best approach and the easiest because I've seen a lot of videos on YouTube and a lot of people complicate a simple process. So by the end of this lesson, we'll take out all the nonsense when it comes to multi-time frame analysis and make it really simple and easy to understand for everybody. So pay attention. So first thing you want to take into account is price moves in a supply and demand structure on the macro. So this would be your supply and demand structure. Price breaks structure and then comes back inside of the range. What is the range? The range would be this high and this low. So every time price breaks structure, price comes back inside of the range to seek your extreme level. So your extreme level would be the swing high and swing low, and it would be this extreme level inside of the range or somewhere nearby. This would be your supply and demand structure, which I explained previously in many previous lessons. And the market sometimes moves in a support and resistance. Once price breaks structure, instead of dropping deep here and looking for a discounted level, price would just react of the top of the range to continue. But the good thing is, when looking at your macro, price mostly moves in this nature. Price moves in a supply and demand structure. So this is something you need to take into account. So what we're going to do here is we're going to break our multi-time frame analysis into two parts. Keep it simple. Our macro, which is our higher time frame, and our micro, which is our lower time frame. I've seen a lot of other videos where people break it down into 3 to 4 or 5 portions. And this, in my opinion, just makes it confusing. You want to keep it as simple as you can. So your macro would be, let's say you have a break of structure here and price comes back inside the range and a rejection. This would be a representation of your macro. Your micro, on the other hand, would be something like this. Now, price breaks structure and comes back inside of the range. So this will be the difference between our macro and our micro. This is what happens on a lower time frame that happens right here. And this is how we're going to look at the market. We're going to keep it really simple and break it into two portions. Before you proceed, make sure you like, share, and subscribe to the channel. This video is completely free and not monetized, so please leave a comment to help the algorithm. So the first thing you must do is you want to go on the highest time frame you can go to get the most context. You want to see your swings. So again, let's start off on a monthly. On the monthly, we are lacking details as far as our day trading goes because all you see is these big candles. Now let's go on the weekly. You could obviously play around and go on your 2 weeks, your 3 weeks, and so on. But in this case, let's just keep it simple to not overcomplicate. But once you understand the entire process, you'll be able to play around with all the time frames just like how I do. So the best clues is always looking to the left. History determines future. So you always want to look what happened in the past and how price action was delivered. On the weekly time frame, you can see your swings clearly. You can see a swing high, swing low, back in the range, break down, swing high, swing low, rejection back in the range, swing low, rejection back in the range, swing low, then you have an expansion. Price went on a lower time frame here because we know compressions. Every time you get a compression, that means the time frame switched. So you would go on a lower time frame. And now you have a break of structure. So what you do is you want to mark your range. You want to mark your high. And let's use color coding. This will make this process a lot easier. So for our macro, let's use the color blue. So our macro here, this is our swing high, this is our swing low. And now let's go on a lower time frame to see where we can see our micro swings. So on a daily here, you can see a little bit of micro swings, but you're still getting a bulk of candles. So you're still getting these big expansive candles. And we want to get a little bit more detail. So let's go on the 12-hour. Now you're starting to see price a little bit clearer. Let's look to the left. And when you look to the left, you see a lot of compression zones. These compression zones means that price was moving in a lower time frame. You see a compression zone here. You had a compression zone here. So let's go a little bit lower, somewhere we can get a clear view of price. And here we're starting to see price clearly. So as you can see, the compression that we had right here, we're starting to see the swings. We're starting to see swing high, swing low, swing high, low. So what do we know? We know when price breaks our macro structure, price usually comes back inside the range. So what are we going to do here? We are pulling out our fib and we are marking our extreme zone. So what you want to do is you want to mark your extreme zone right here. This will be our extreme discount. And why are we doing this? When you go back to your macro, once you have your break of structure, what you're expecting is for price to stop on this level and start coming back down here to reject from this level and so on to mirror this exact price action. You look to the left and you want price to mirror this type of price action where you have a break, retest, break, retest, break, retest, break. So even though price is bullish here, on the micro, we will be on a downtrend. So what are we waiting for here? We're waiting for a change of character. We're waiting for a break of structure. You had a rejection right here. And let's see if price breaks structure to start our swing process. So you had a break of structure right here with just the wick. Let's see if price comes back inside the range. Okay, now price has come back inside the range. So now you pull out your fib. And you have a high probability of getting a rejection somewhere here. If price does reject from here, you can expect price to continue a micro structure on our 8-hour. Again, why do we pick our 8-hour? Because we see clear swings. Price action is visual. You have your rejection right here. And price broke structure. So now that price broke structure, what is our micro range? Our micro range is, let's make it red. This is our micro range high. Let's see if price comes back inside the range. Price did not. What is our current range? This is our swing high. This is our swing low. This is our shelf. So we will mark our shelf. And we expect price to retrace in this area to continue lower. Price tapped this area and dropped lower. So now what is our range? Now our range is, this is our current swing low. This is our current swing high. And this is our shelf. So we expect price to reverse within this area and continue dropping. And price dropped. So now let's fast forward and let's look at the reaction from our extreme. Price retracing back inside the range and dropping down again. Price dropped, came back inside the range, dropped. Now price dropped, came back inside the range, and dropped again. Now price is rejecting. So what are we looking for now? We are looking for a change of character. We are waiting for a either internal to internal rejection, external to external, or internal to external. So let's look for a reversal. You have a break of structure, price coming back inside of the range. Now we're waiting for an expansion. And we had our price retrace back inside of the range and expanded again. So now what is our new range? Our new range is this high and this low. We'll wait for rejection. What happened? This was the range. Price broke structure, came back inside the range, expanded, came back inside the range, and expanded again. Price went for a stop hunt, something we'll cover in a second. We have our stop hunt right here. Once price closes back inside of this area, we can expect price to continue high and target this high right here. And what do you see on the macro? On the macro, what happened? This entire process happened inside of this swing. So price broke structure, came back to our discounted level and expanded again. And what do you expect now? What is your next step? Your next step here is you mark up your range, the exact same process. Don't overcomplicate this. Keep it simple. It's your swing high, swing low. What you're waiting for is for price to come back inside of the range, find rejection, and continue higher. So let's talk about the types of entries. So let's say this is your macro. Let's say this is your macro. Price broke structure and price is back inside the range. So on the micro, what you could do is you can trade your regular structure. So you can wait for price to get back inside of the range. Once price gets back inside the range, you can highlight your range. And you could either take the initial contact with your range, or you can take a deep retracement somewhere in the deep discount. So you could take one of these trades. You could take a trade right here and expect price to drop down, or wait for price to trace here to take down. So again, either here or here. So let's say you're trading this, or you are trading deep retracements. This would be one way to trade it. So another way you can trade this, which would be the safer way, but you wouldn't have that many trades. So this wouldn't happen that much frequently, but it's a higher probability. Let's say price drops, you're waiting for an inducement and a stop hunt. And once that stop hunt occurs and comes back inside of the micro range, right here, and you have your stop hunt, you can enter the trade once price closes below, and your stop loss would be a lot smaller and your TP would be all the way back to the discount. So let's look at our entry model. So where's our micro range? So our micro range is right here and right here. So let's wait for a break of structure. So now we have a break of structure. So where's our range? This swing here, and our previous swing was this swing. So again, if price does come back inside of the range, you're waiting for an entry. You can have an entry here with a set TP to 2 to 1, or you can wait for price to retrace to the extreme zone. It would be right here. So now what do we have here? Let's look for another entry. I think it already happened because price did retrace. So let's look for another one. As you can see, price did retrace. What do we have here? We have a micro range right here. We have a swing high, a swing low, and a swing high right here. We have another swing right here. So these are multiple entries. And this is the 6-hour time frame. You can obviously use the 8-hour time frame as well. And these are multiple trades throughout the week. You can have another trade right here. You have another range, swing low, and a swing high. Your trade would be right here, even though I'm not a fan of such a small range. Now, once price breaks structure right here, we're looking for another range. Okay, and now we're looking for another range, which is our swing low and our swing high, and so on, so on. So this would be our basic entry strategy when it comes to multi time frame. Before you proceed, make sure you subscribe to the channel, like the video, leave a comment, and make sure you visit our website, etmtrading.podia.com, and use code ETMARMY for 20% off. So what do we have here? We're on our weekly time frame and we can see our swings clearly. Looking to the left, you can see your swings clearly, and even prior to this. So we can tell that this pair right here is moving on the weekly as far as the macro goes. So now let's go on a daily. On a daily, the swings look fair. Let's see if we can drop a little bit. Yep, perfect. Yeah, on the 12-hour, it looks really decent. Now, if you go on the 8-hour, if you look at this example compared to the previous Euro USD example, this example right here, the 8-hour just looks too messy. As you can see, it's too wicky and there is too many swings. So we would opt to using the 12-hour or somewhere around the 16-hour maybe. Yep, the 16-hour even looks better. So let's go back on a weekly. What do we have here? We have our range. We have our swing high and swing low. Now look at what's happening here. This would be the extreme of the range, and price is not continuing above. It looks really close to this setup right here. If you're looking at the mirroring effect, it looks similar to this. The price is finding rejection at our extreme. So in this case, we are still bullish on the macro, but we could have a bearish bias. So now we need to look on the micro. So what do we have? We have a break of structure to the bear side. Again, our micro is our red line. This will be our swing low. This will be our swing high. So we could take low positions just for the fact that the micro is turning at our premium zone. Let's make our premium zone red to avoid confusion. So price is turning from our premium zone. So now what you would do is your first entry could have been here with the stop loss being a little bit above your swing high for a 1-to-1 in this case, just because the extreme of this range here is literally right here. And you want to take precaution at this level. Or you could wait for your deep rejection, which in this case would be your swing low, swing high, and somewhere along this level. So let's wait and see. And price rejected and broke structure again. So now we have this new range. So the first trade was successful. Let's see if we can get another extreme return. You had another extreme return. Trade worked out successfully. So now mark up your new range. So now this is your swing low, and this last rejection is your swing high. Let's follow price. Your first entry could always be right here. The only thing I don't like is how big this stop loss is. So me personally, I would skip this trade just because this wouldn't be significant. Unless we can get a deep retracement, then we can take this trade. Okay, what do we have here? We have a false rejection. So what you want to do now is you want to mark this level. And you want to mark your range. And you want to mark this level as a potential stop hunt. See if we can get a stop hunt. Okay, we got a stop hunt. So what are we waiting for? We're waiting for price to close back inside of this range. Once price can close back inside of this range, we can get in a trade. Not yet. Not yet. Price finding rejection. And price closed inside of this range. So you could have a trade right here, but the risk to reward ratio would not make sense unless we take the trade all the way to the 1-to-1. Which in this case is unlikely just because of your discounted level. So let's keep carrying on. So now what do you have here? You have a stop hunt and price closed back inside of the range. So what you could do again, you can take a similar type of trade, but the risk to reward wouldn't make sense. So you would skip this trade. Let's carry on. And you're having a reversal here. The momentum here from the discount level is slowly starting to shift. So now you start marking up your new range, which would be this swing and this swing. And you're looking for a deep retracement. So let's see. Okay, you had your rejection, but price did not fully break. Let's see if price breaks. Okay, price broke. So now what is your range? Is this swing high and this swing low. Now you had another break. So now what is your range? You have your swing high and swing low. Another range. Swing high, swing low. And another rejection. So it was a really good week of trading. Actually a good month. So now price is back into the extreme. And what happened here, if you go on a weekly, price did break major structure. So now this is your low This is your high mean, and this is your low, and you're going bullish. So you're waiting for price to retrace back down. So now you'd be in a bearish micro cycle. Do you understand why we did this? Because let's remove this and start over again. You have your swing high right here. And you have your swing low right here. Why is it this? Because as you can see, price here formed this structure, break down, rejected from the extreme level, and broke structure again. So you're anticipating something like this. So let's try and take price down. Let's go back on our 16-minute time frame. And price dropped down inside of our range. Found rejection in our entry point. Let's see if price will continue breaking structure to the downside. And it did. Now we have a new micro range. We have this swing low, swing high, I mean. And we have this swing low because price did wick below. Or almost not yet. Let's see if it completely does get below. Have your retracement. And price broke structure. See if we can get another retracement. Okay, we're starting to have a range form here. Let's see if it breaks to the downside. If not, price could always reverse in our extreme point. Why? Because this area will start pushing price to the upside. It doesn't have to go that much deeper. So now we could be in a bullish trend. Why in a bullish trend? Again, we can go back on a weekly and take a look. Broke structure, came back down. Broke structure, came back down. We're anticipating the bull trend. So now this is our high. Waiting for a range to form. Now we have a break of structure. So this is our swing low and this is our swing high. Swing high and our swing low. See if we can get a pullback. Here we don't get a pullback. We have this level right here, which would be on a lower time frame because we don't have anything current. And we hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and make sure you leave a comment. Let me know what video you guys want next.